While taxes may be the last thing you want to think about this holiday season, if you don't watch this video and take action before December 31st, it could be the difference between paying a substantial amount of taxes next year on your crypto earnings and paying nothing at all.
The IRS is coming after crypto, and this will have massive implications on your crypto and will cost many of you thousands of dollars in penalties, extra taxes, and even accounting services. This is huge because if you aren't paying attention or don't know what to avoid, then you could be penalized, and this will eat away into your portfolio, any compound growth you could take advantage of, and of course put a dent in your financial goals. And in this video, I'll be sharing what those new laws will be so you can protect yourself, because in 48 hours, these laws are said to go into effect starting January 1st, 2025. But according to one expert, there may be a potential loophole to these new IRS rules, which I will cover in the video. Now, really quickly, as a disclaimer, anything I share in this video is not intended to be financial advice, nor is it meant to be tax advice. These are my opinions, and I'm just sharing information from other people and experts in the space. In other words, this video is for informational, educational purposes only. However, not only will I cover the new tax stuff, but I'll also be covering this article that states how XRP open interest has shrunk by $1 billion in the last 24 hours, what that means, and whether or not you should look to accumulate more XRP or whether you should start taking some profits right now, which will lead into the next portion of this video where I'll actually dive into the open interest on the charts and more specifically on Binance, which is the largest exchange on the planet and does the majority of volume. This is going to give us a good read on the market. I'll also be covering the bond market and what's going on with the largest market in the world, which is debt, and more specifically US government debt, what it's signaling, and how this is playing a role in what's happening with the crypto market. And of course, I'll cover the XRP price chart and some potential outcomes through the rest of the week. So let's dive into the video. And as always, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the channel, my friend. If you're new here, my name is Paul, and you can find me on Twitter or X at PauliDefi, PauliDefi. That said, I hope you had a wonderful time at Christmas with your family. I'm just getting back. I feel refreshed. I'm happy to start cutting more videos for the community. And so the biggest thing that I wanted to cover is arguably taxes, because at the end of the day, the wealthiest people on planet Earth are ones that can either defer taxes or pay less in taxes, at least if they already have a solid income. The biggest expense or cost to business is always going to be taxes. So the IRS at this stage is really cracking down on crypto, and more specifically, they are creating new crypto tax regulations that are going to impact 50 plus million US crypto investors. Now, really quickly, I don't want to do all of the covering of the tax code. Obviously, that's not realistic or possible in a very short video. However, here is what crypto moves are taxable under the new laws now. Now, if you sell for USD, that equals capital gains. Now, obviously, if you have a loss, you're not going to get taxed on that loss, and you can probably write it off into the next year up to a certain amount. That's typically how taxes work. Again, I'm not an accountant, so bear with me, I'm just covering information from a lot of other sources. That said, also, if you swap crypto like Bitcoin to Ethereum, which in the past wasn't really required to be shared with the IRS, now it will be. If, for example, I swap Bitcoin and then it's to Ethereum, that would equal taxable if there is a slight exchange rate. At the end of the day, it's probably going to come down to the US dollar, but still, if you earn income on it, it's going to be taxable. If you're paid in crypto, that's going to be considered income. If you're even mining or staking in terms of rewards and you're getting income on that. So for example, let's say you're on a DeFi exchange or even you're an accredited investor on a US based exchange. If you are staking like XRP in any one protocol or platform and you earn interest on it, for the sake of this example, let's say you earned a total of 10% of interest over the course of the year on $100,000, that $10,000 that you earn is now going to be taxable. And if you're not compliant, you will risk penalties. In terms of what is required, you're going to have the record of the timestamp, the note of the transaction type, buy, sell, or fee. You're going to have to include the USD value and fees and adjust your basis for accurate gains. Guys, this is so much information that if you're truly not on top of it, it's probably best you just stay on an exchange and then take that information, download it, and then send that off to an accountant. But for me, it really makes things a lot more difficult to want to mess around in terms of a bunch of DeFi ecosystems, because these types of situations are going to create a boatload of headaches when it comes to reporting and the IRS. Now, here is a video from Andrew Gordon sharing a little bit more on this situation.
Last summer, the IRS and the Department of Treasury issued final broker regulations. These regulations require crypto exchanges to report tax forms to the IRS and to taxpayers, starting with the 2025 tax year. What this means is that the IRS is going to start receiving information on your cost basis, sales price, and your gains and losses on your crypto trades. There really is no more hiding your crypto activity. But what's important, and the reason that we're making this video, is that it provides a huge opportunity to save on your taxes, but you have to pay attention and you have to take action before the new year. That's right, if you wait too long, this opportunity could pass. And that's because under these new regulations, the exchanges are going to be reporting to the IRS, but also there's an opportunity to fill in or allocate your cost basis from all of the tokens and crypto assets that you've purchased in years before. Because as you start to sell in 2025 and in the future, these crypto exchanges won't have the information from all of your purchases before. And so the IRS has provided what's called a safe harbor, an opportunity for crypto investors who have crypto that they've purchased in these earlier years to allocate or determine how they want their cost basis ordered as they start to sell in the future. And this means that you could determine, for instance, if you want to sell your oldest crypto first, or if you want to sell your highest cost basis first. And by deciding that, you can greatly impact your gains. Because if you sell your highest cost basis first, you may then have very little or no gains, or even losses, depending on the price of crypto as you sell it. But this determination and allocation has to be done and in writing before December 31st. And so there are a few key steps that you have to do in order to comply. Number one, make a list of your exchanges and wallets. And this is going to be crucial because it'll help us with our next steps. Identify any of the wallets that you currently hold that have digital assets in them. This might be hosted or unhosted wallets, or even crypto exchanges. Next, we're going to go to each of these exchanges or wallets and take a screenshot or snapshot or somehow save an image of what you are holding on each of those wallets. What I mean by that is each of the digital assets, be it Ethereum, Bitcoin, and so forth, what is the volume that you're holding and what is the current date? An easy way to add the date to a screenshot is through opentimestamps.org. You can add an image and upload it there, and they can add a timestamp. Now, take all of these images and save it somewhere that you can keep it for the future. Now you've got an inventory, and you also have a list of all of the different wallets and exchanges with their screenshots. The next step is to fill out a safe harbor statement that complies with the revenue procedures issued by the IRS.
So that said, you're going to want to be on top of things as soon as possible, because within 48 hours, these new laws and regulations come into play. However, there is a gentleman over at Galaxy Digital who basically is sharing that DeFi has 3 options if the IRS rule isn't rolled back. Now, Alex Thorne is the head of research at Galaxy Digital, and he said DeFi applications with no front-end website, non-upgradable contracts, and that receive no consideration from the disposition of digital assets, i.e. collect no fees, could be exempt from being designed brokers or designated brokers under the proposal. Said another way, extremely decentralized applications are not in a position to know and thus could not comply with broker reporter requirements. In other words, if nobody is truly in charge of this entire entire DeFi platform. And this would truly have to be decentralized stuff. So if you're not completely comfortable in the world of DeFi, you haven't messed around on a bunch of DeFi wallets, and you don't really know any truly extremely decentralized applications, this probably doesn't apply to you. But at the end of the day, this is the type of stuff that they simply cannot report because no one is in charge and they're not even collecting fees. Now, this rule has been ready to go for a while now. However, they dumped it on the last Friday of 2024 in the middle of a holiday stretch on purpose, obviously, as if we wouldn't notice or make an absolute ruckus over it. In other words, these people over at the IRS almost did it to be hostile to crypto, and it's an absolute joke. And I hope that under the new administration, they actually roll back a lot of funding for the IRS, because like the IRS and like the SEC, these types of entities seem to be accountable to nobody and ultimately do whatever they want, even in the face of Congress. Now let's dive into the bond yields, as Jim Bianco, who I find quite informative, especially when it comes to a macro standpoint, just shared that the 30-year bond or yield made a new 2024 close high yesterday, and now is the highest yield since November of 2023. Now, why this is important is because typically when we get a US 10-year over a US 2-year bond yield curve inversion, what ends up happening more often than not is we get a situation where markets continue to rally into this yield curve inversion. So for example, right here, in this situation right here, markets continue to rally. In this situation right here, markets are rallying. It's only when the markets start to crash that yield curves start to normalize. Again, when we have the 10-year over the 2-year. So in this situation, even right here before 2020, and then again right here from 2022 all the way through 2024, we finally had a normalization in the yield curve rate like we did back here. Now notice what happens in the market shortly thereafter the yield curve normalizes. So notice how the yield curve is coming back above this green line or the 1% line. What ends up happening is the market starts to crash. In similar fashion, we saw 2008 through 2009, the market crashed. It wasn't until April of 2011 that the market started to recover. So this is a very long period of time. And notice how the yield curve now is normalizing. Well, I have these lines right here, and as you can see here, and I'm going to really focus in on these lines right here. You see how the yield curve slightly inverted only to normalize? Well, we had a period of time in 2020 where the market continued to rally for about 160 days before a crash, and then the yield curves really began to normalize and went to these high rates of like 12%. Well, in similar fashion, notice how the yield curve has right now normalized, and we are currently at 111 days. I thoroughly expect something to happen with the market, but I think this is exactly why markets are ending up a bit skittish and why crypto markets have been suffering, considering crypto markets are treated as risk-on asset classes. Now, although we might have more time in this rally, and although the rally might continue through the end of the year, I also think it's important to pay attention to what's happening in TradFi markets or traditional finance. This is why XRP open interest has shrinked by $1 billion in 24 hours. Now, open interest is simply a bunch of contracts. In other words, if I have $1 billion of open interest, this is contracts on the short side and on the long side, or buy and sell, so to speak. And whenever this increases, this means people are not only more interested in those prices of the market and have more running bets, but whenever it shrinks, it means people are relatively uncertain or worried about some serious volatility. So in this case, it seems people are more worried because it is shrinking. As this article even states, it reflects the growing trader skepticism around a price breakout, and at the same time how the price divergence signals bearish sentiment with declining participation and consolidation under the $2.73 resistance. Now, really quickly, before we dive into that open interest and those charts to show you exactly what's going to happen with XRP, or what I think is going to happen, if you haven't already, you have about 48 hours left to head on over to bullrunners.com and be locked in at that $97 a month rate. Yes, if you get started, you will be grandfathered in at that rate and you won't be charged more. However, if you get started after January 1st, the rate will be $197 a month. And the reason we're increasing the price is because we already have 1,100 plus members. And the thing is, this is the best community in all of crypto to commit to becoming a crypto millionaire in 2025. The alpha is truly here. You're going to learn how to do technical analysis like a pro. You're going to be on live calls with pros. You get to ask them questions, but we can only service so many people at once before we actually have to get more serious about sifting and sorting who's serious. So that said, head on over to bullrunners.com, watch this 26-minute video to learn more about what you get inside of this program. It's a long video because you get a stupid amount of value and things. You're going to learn how to get access to DeFi yields, airdrop alerts, altcoin picks that 5x, 50x by our pros, you name it. So go ahead and go to bullrunners.com and let's get back into the video. Okay, so now what we're going to do is we are going to look at open interest in terms of Binance. Now, I am on an hourly time frame. Whether I'm in an hourly or a 4-hour time frame doesn't really matter, although it can change our perspective. What I'm focused on is trends. In other words, as you can see here on XRP, from the local lows down at like 48 cents to 52 cents, and up until the rally of 290, we had an uptrend, a series of higher highs and higher lows. And in similar fashion, we saw open interest continue to trend to the upside. We had a series of higher highs and higher lows. This is positive because what this means is longs are opening at the market. If you can continue to get rallies in the market and open interest continues to increase into a rally, or even, for example, right through this range right here, notice how open interest is increasing as the price continues to increase. This is a very positive sign. However, when you start to get a local high and open interest starts to decrease, even when we are in a range of support, this is indicating that people are losing certainty. And we have obviously less liquidity like right down here. But what I'm trying to say is people are really uncertain about the direction of the trend, which is why I would not be taking on any extra leverage at this moment in time, especially with the bond market and just the general market looking the way it does. So this is really where it helps to do a bit of extra technical analysis, because at the end of the day, price is king. Even if people are very bearish, if the price looks strong or is being supported, why would it pay to be a bear? On the flip side, if the price looks really weak, it doesn't pay to be a bull. Ultimately, we have to be agnostic, even in the case of XRP, because it is an asset, and like all assets, they are subject to market forces far greater than just one asset. That said, we have a pretty strong support right down here at the $1.96 range, and as you can see here, this was our local range high. When we broke out, we went to a new all-time high, and then we were supported right here. So this seems to be a pretty strong support. In terms of resistance, it seems that we have a pretty strong resistance right here at the $2.64 to 65 cent range, considering we had 1 sell-off, 2, and 3. So consistently we are seeing a resistance. And if you were on these videos or watching them at any moment in time, you'll remember that I did tell you I want to hold this range on a daily time frame. And if we don't, it's very much likely a bull trap, to which that actually did happen. And we did break all the way back down to 195, where I said I was going to be a buyer somewhere between the $2.20 range all the way down to 195. We did buy that dip, and now we are somewhere in the middle. So the midline is somewhere right around here. And as you can see here, it acts as a support. It acts as a resistance. When we break out, we are holding the range, and when we break down, we are being resisted at the range. So $2.20 seems to be the range. When I pull out to a daily time frame, you can see that we are currently in an intermediate term downtrend, even though we are in a longer term uptrend. The long term uptrend obviously is a series of higher highs, higher lows. Are these lows higher than this low? Yes. Is this low higher than this low? The answer is yes. So yes, a longer term uptrend, and although XRP is being supported, it's important to note that we are in an intermediate term downtrend. So what this means is you do want to pay attention to what's happening with the price right now. And right now we are struggling to maintain this range. So it might be likely we come back down to that 195 range. And whenever we do, the more you touch a range, the more likely you break down. So I don't want to be adding too much more to my risk or positions here. I am currently holding my position even through all of the volatility, all of the noise, all of the negative sentiment, the fact that a lot of volume has decreased because of Christmas and the holidays. But at the end of the day, things aren't looking too hot for XRP right now. And also when you take into consideration the fact that now this 10 EMA is just about to cross over, and I'll really dive in there really close right here on the daily time frame, is about to cross back over that 20 EMA or the orange line. So whenever you get a situation like this where you break down below the 10 EMA, the 20 EMA, they're about to cross over. Yes, we may get one last little spike above this $2.33 range, but if we break down below this range right here at 233 after breaking above it, and I'll go ahead and kind of draw that out so you can see it. If, for example, we continue breaking down and then we start to break right back out and then break down again, then chances are right around here is where I will be taking the majority of my profit on XRP, considering we are still very profitable on XRP all the way back down from that 50 to 60 cent range. So things are looking good for anyone who's buying and holding XRP, but I wouldn't be buying too much more, okay? Because this is also equally possible and potential we start to break out, but I would like to see a break above this $2.60 range for a new all-time high before I really add on to my risk. So we've got a lot of drawings here. Let me just remove those and simplify things for you. Things are about to cross over on that 10 and 20 EMA, not looking too hot. The fact that on a daily time frame we are below the 10 and 20 EMA, also not looking too hot. Yes, we do have a support down here, and yes, I think we might potentially see some more buying dip buyers right down here, but I would like to see a break and a hold above the $2.33 range if I'm going to add to my positions, and more specifically, definitely above that $2.60 range before we make a new all-time high. As things stand, things aren't looking too bullish for XRP, and if I were just taking a trend line from the top of this range, you can either draw it from the top of this wick right here, or you can just remove those wicks from your drawings and really focus on the candle closes. So as a candle close, I would like a close above this descending wedge or triangle. That said, if you haven't already, head on over to bullrunners.com. You've literally got like 48 hours left to be grandfathered in and locked in at that $97 a month rate if you get started before January 1st. If you do not, the price is increasing to $197, considering we have a little over 1,100 members now. And the thing is, we can only service so many people at once on our live calls. Yes, we do have live calls. Yes, you can ask all sorts of questions. Yes, we have altcoin picks by pros, that 5x, 10x, 50x. Yes, we show you how to do technical analysis like a pro. And yes, we have one of the best, if not the best, community in all of crypto. People that are obviously taking their crypto journey very seriously and are committed to becoming crypto millionaires in 2025. So if that sounds like you and you want to learn more, just head on over to bullrunners.com. Watch this 26-minute video. It should answer all of your questions. Then go ahead and get started. You have nothing to lose and everything to gain. I think this membership more than makes up for the price of $97 a month, which will be $200 very shortly. So thanks so much for watching the video. I hope you learned something, and I look forward to seeing you in the next video, my friend. Goodbye.